Oh, hello there, it's John from Barefoot Accounting here. Today I thought I'd cover how to get money out of your business, because this is something that seems to confuse a lot of people when they first start running a business, especially if they're on their own, and it's almost as if everyone assumes you should know how to do this. So I'm not going to go into any great detail, but I just wanted to kind of cover some of the basics so you're not kind of totally bamboozled. Now, if you're running your business as a sole trader, this is kind of easy, because essentially you are your business, and you know your money and your business's money is the same thing. So that pretty much takes care of itself. I mean, you could actually use the same bank account for both, though I strongly recommend you don't. I really do recommend, if you're a sole trader, you do have a separate account for your business. So that's a sole trader. It gets a bit more interesting though, or maybe complicated, depends how you look at it, if you're running a limited company, even if you're the only person in it. The main reason is you and your business, in that case, are separate legal entities, and you really have to bear that one in mind, and you both come under different tax rules. You also, as the person, probably owner, founder and sweeper upper and everything, find that you have three roles. You're the director, you might find you're the employee, and also the shareholder. So these all are kind of treated differently when we start looking at tax and actually getting your money out. Now, there are really just two ways to do this. The first one is to go straight through payroll as if you were an employee. Well, technically you would be. Right there. So there you have to run your payroll, and you have to do monthly submissions, RTI submissions, and you even have to do that if you decide not to pay yourself a month. So common things, being a director and running your own business, what people ask is, firstly, you don't have to have the same salary every month. And because it's quite accepted that often the person, the director, might not be taking the same salary every month, your tax will be, and national insurance will be calculated slightly differently. So they kind of basically aggregate it, so it looks at it as a whole rather than on a monthly basis. So that's quite handy. The other way to take money out is dividends, because this is, if you're a shareholder, you put the capital in and then you can be rewarded in a share of the profits, basically. Two main things to bear in mind with dividends though: they can only be paid out of your profits after tax. Now, this can include profits from prior years, but that's something to bear in mind. It's all very well sort of setting up your payroll and thinking, oh yes, I'm going to just pay myself a big dividend, but if you're not making the profit to cover it, you're not going to be able to do that. And the other one is, generally speaking, you have to pay dividends according to how many shares everyone has. So if there's like three of you, with a share in the company, you're going to have to split it however much shares you have between all of you. So you have to bear that in mind, because it can impact what you do for one shareholder can impact on the others. Something to bear in mind. So they're the two things, and you can juggle the two to be a bit more tax efficient and help your personal cash flow. So that's something to bear in mind. Now, the other thing to talk about though is what happens if you haven't bothered about dividends, you don't run a payroll, and you're just taking money out of your company, pretty much like you might do if you were a sole trader. Well, that comes onto something known as a director's loan. Now, it's quite normal when you start a company that you might put money into the company to get it going. That's fine. It's basically the company owes you money, and that's pretty much standard, and it's quite expected. Now, if you keep taking money out, you might find it switches around, so actually you owe the company money. And you can do that. The only problem is, if you think about it, you've taken money out of the company, but you've not gone through any tax system. You've not gone through a dividend system, and you've not gone through your payroll system. So what would happen is, if you owe the company money and after 9 months after the tax year end, you haven't paid it back, your company would have to pay tax, or effectively put money towards the Treasury on your behalf. It's section 455 if you're interested. But basically it means any idea of tax planning goes out the window, and it makes sense really. And that's held, and then if you want to, you can later at the date sort it out, go through the normal tax channels. That's a bit slick here. Go through the normal tax channels, and then you can get the money back from HMRC, but then you'd be paying the tax as an individual. So I hope that one makes sense. The thing to bear in mind with directors' loans, I mean, you can read about all these tricks and tips of getting money out of your company and using your director's loan to kind of take money out and bounce it around and such like. And you can do that, and you can stay with all the rules, but I would say you're probably on a bit of thin ice. There you go, cue segue to the thin ice. Because if you get it wrong, you're just going to incur loads of tax and you're wasting a lot of your time, really. So be a bit careful about doing that. If you do find that you do have this problem, I would say that now's a good time to deal with it, because you're actually almost towards the end of the personal tax year, which keeps your options open. If you leave it longer and bury your head in the sands, year by year, all your options of how to get out of the muddle disappear. Because basically you don't really want to be getting into the section 455, because it isn't very, essentially you're paying tax as if it was a highest rates dividend. So you might be better off just paying yourself a dividend, but then if you haven't got the profits to do it, you can't. So just bear that in mind. I hope that was helpful. Catch you all later. Toodaloo.